So how do the ultra wealthy avoid taxes? When I'm talking about the wealthy, I'm not talking about your doctor who's making $1 million a year. I'm talking about like the Elon Musks of the world, the guys who have hundreds of millions or billions of dollars. How do they minimize their tax exposure? So here's the first thing you have to understand. The ultra wealthy primarily own assets, and a lot of the income that they generate, or a lot of the cash that they have on hand to spend, comes in the form of returns on those assets, be it real estate or businesses that they own, as opposed to the lower and middle class who primarily generates income through some kind of salary or salary adjacent income. Elon Musk doesn't make money by getting paid billions of dollars a year. Rather, the assets in which he owns increase in value billions of dollars a year. The only way to generate income from those assets is to sell them. If you want to actually have money to spend, that is, go and buy a car, a house, a nice dinner, etc., you have to sell that asset to actually have cash on hand to purchase those goods and services. Or is it? What most ultra wealthy individuals will do is they will actually take out a loan against these assets. And they'll use that loan to spend money on houses, cars, services, whatever it might be. Meanwhile, they still own the asset. So they still own stock in that company. They still own that piece of real estate. They still own whatever it was that increased in value and likely will continue to increase in value. But they now have cash in which they can actually spend in the form of a loan that they receive from a bank. These loans are generally pretty low interest. If you're dealing with Elon Musk or, again, Elon Musk adjacent character, the bank is going to assume that that individual has good credit, is going to be able to easily pay back the loan, and for that reason, that individual is generally going to get a pretty modest interest rate on whatever loan they take. Now compare that to had they liquidated the asset, sold it, and had to pay capital gains. They'd be paying upwards of 20% on the sale of that asset. Instead, however, they'll still pay interest. Depending on the prevailing interest rate, it could be 4, 5, 6%. It depends, obviously, on the interest rate environment. But the point is, they can take out a loan, pay a relatively low interest rate, much lower than they would pay in the form of taxes, and still own the asset. And that asset will likely continue to grow. So they might take out a loan for $100,000 against 100,000 shares of Apple. They might pay $5,000 a year of interest, but the value of that Apple stock will likely go up 5% or more every single year. And so they now paid no taxes, still got to purchase whatever they wanted to purchase, and their net worth remains the same or very close to the same because the value of that asset has continued to climb, likely at or above the level of interest in which they're paying, and they paid zero taxes. The top 1% in this country pay for about 50% of all taxes in the United States. So 1% of the population pays over half of all the taxes in this country. Elon Musk, for example, not to keep bringing him up, but he paid about $11 billion in taxes in 2021, I believe. So I'm not advocating to raise taxes on the rich. I think these people pay plenty of taxes as it is. What I'm emphasizing is the fact that there are some creative tax strategies that these individuals have at their disposal to minimize their tax exposure, I think far more than the average American.